So do we really want to risk this loan, this property, this deal, because our score is so close to that minimum? Hey everyone, Justin Cooper here from Pine Financial Group, where we work together so you succeed. I know you found us here on YouTube, so if you like these videos, be sure to subscribe and hit that notification button to be updated when our next video drops. Got a quick video about how banks and lenders adjust criteria to make sure loans can close, but also how we as investors can take a similar approach to our limiting beliefs. If you see me speak about the BRRRR strategy or refinancing out of hard money loans into long-term loans for rentals, then there's a good chance you've heard me use the term overlays. Now, there are certain base requirements that all banks and lenders are trying to hit. And most of what I talk about are the Fannie Mae guidelines. So banks are wanting to sell loans to Fannie Mae. And to do that, they have to make sure that these loans are checking all the boxes that Fannie Mae requires. The way I look at overlays, they are extra rules that banks and lenders put on top of other rules or guidelines to make sure that this new loan will fit into that Fannie Mae box. Some obvious ones might be liquidity, or the number of finance properties you can have. And liquidity, of course, refers to how much money you have in the bank or maybe in retirement. And the number of finance properties refers to how many mortgages you can have on your credit. One of the more common loans used to pay off our hard money loans when folks are using the BRRRR strategy is a rate and term refinance. And typically I discuss working with Fannie Mae direct lenders as they do not have any overlays. What they're doing is they're underwriting directly to Fannie Mae's guidelines. So one important point here is that borrowers or investors can have up to 10 finance properties. Now that's awesome, but the guidelines are different for properties 1 through 4 and then 5 through 10. The qualifying changes. And one of the biggest differences in that is investors' liquidity or the cash in the bank. Well, if the Fannie Mae guidelines are, let's say you have $5,000 in the bank for properties 1 through 4, and say $10,000 in the bank for properties 5 through 10, then a bank might create an overlay saying that you can only have up to 4 finance properties. This overlay makes sure that they don't have to worry about the different guidelines for properties 5 through 10. Another overlay might be that they simply require $10,000 for all properties. Again, making sure that the loans that they're writing will be a good fit for Fannie Mae and that they can sell those loans. Banks and lenders are doing this to make sure that their plan of selling the loan will work. So how can we take a similar approach to things in our personal lives? Let's continue with that example of getting a loan. What if we hear that the minimum credit score to get a loan is 650, and the last time we checked our credit was 651? Sweet, we can get the loan. Now, what you might or might not know is that there's 3 different credit reporting bureaus, and usually each one of them gives you a slightly different score, and that score is constantly changing. So do we really want to risk this loan, this property, this deal, because our score is so close to that minimum? What if we put an overlay on ourselves? Our personal minimum credit score is, say, 675. Well, then what? It would be less worrisome, right? We would be more confident in getting that loan, wouldn't we? What if we did the same thing with our liquidity? What if the minimum reserves in the bank, again, is $10,000, whether that's from our budget or because we know to get a loan we need $10,000 or whatever the case may be? And what if we overlay a new rule saying that instead of just $10,000, we need to have $13,000? Could that give us some breathing room? A bit of flexibility when it comes to our monthly expenses or budgeting, maybe a bit of freedom when it comes to our next vacation, whenever that might be, or just a security blanket in these uncertain COVID times. What other aspects of our life could we place personal overlays? Maybe we're habitually late to meetings. So maybe we overlay a requirement to leave 15 minutes early. Maybe we always feel rushed in the morning. So maybe we overlay the alarm clock goes off 5 minutes earlier. I'm shy. Well, then maybe the new overlay is simply saying hi to 2 new people each day. I don't have any savings to fall back on. Well, maybe we just set a rule of simply saving $10 a month. Now, it's not much at the beginning, but this will grow and compound. And best of all, you're changing the conversation in your head about being late, about being rushed in the morning, about not having any savings. In these times of COVID, overlays are changing, overlays are being added, and the underlying requirements are changing in the finance world all the time. What overlays should we be changing in our lives? Share some overlays you have or will be implementing in your life in the comments. I would love to hear from you. And as always, we would love to talk to you about your deals, get you pre-approved, and help you, each and every one of you, with your investing. We've continued to make a lot of hard money loans to investors over the past several COVID months, and would love to see if we can help you. You can find more about us or connect at any time at pinefinancialgroup.com.